one of the most exciting things going on in the option space right now is the explosive growth of ETFs. One of the panels that happened here at RMC, which caught my attention, was about that. And Ryan Sullivan was the moderator, did an incredible job.
Thank you.
Ryan Sullivan is from FTSE Russell, and had a lot of really interesting, great points to make. I'd love to dive in a little bit here, if you're willing.
Thanks for having me.
Oh, my pleasure. What do you attribute the growth of the ETF business, the option-based ETF business?
It's really been fascinating to see the growth perpetuate and almost accelerate the last 2 to 3 years in particular. I think, if you just frame it for a minute, we're at about 150 billion in option-based ETFs, kind of seeking to generate yield for investors, so really income-seeking strategies. And that AUM is up about 700% from 3 years prior. So to your point on just that growth, it is happening, it is continuing to happen. And I think there's probably two main things that our panel touched on them in a little bit more detail, but I think if you roll them up, one is a bit of an insatiable amount of demand for income by investors kind of across the board. So one of my guests yesterday mentioned retirees. It's not finding ETFs and DC plans. It's retirees coming out and looking to transition their portfolio and working with wealth advisors and finding these option-based ETFs as a valued source of income for them. But then secondly, it's younger generations. It's demographic change that are looking for higher yielding portfolios that have become interested in the underlying options marketplace, driving and contributing to a lot of that demand. And then finally, it's really around, I think, shifts in asset allocation, looking for reduced correlations, reducing volatility in a portfolio. And these option-based ETFs can really offer that.
Yeah, I think that last one in particular is really interesting. If you look at the ETF growth, it almost mirrors just options volume growth,
right? Structured
product growth. Options growth is happening to a great extent, in my view, because it's non-correlated. And you have the ability to make bets and take positioning that is not two-dimensional, right? Options represent a three-dimensional surface where you can go out in time and moneyness and make all kinds of non-correlated bets. You pair that with the simple fact that interest rates are higher and there's capital efficiency, right, to these products, and you really get a real value proposition when you compare it to equity exposure or bond exposure, right? To your point, to yield. What else do you think is driving the growth?
We were kind of articulating this just before we sat down. I think the parallels between the ETFs and the options marketplace are fascinating. We've seen that here at the RMC conference. I think the demand for accessibility that either individual option contracts can provide, or when packaged into a solution like an ETF wrapper or another structured product, the permutations and the accessibility of the market, it's very similar in the ETF wrapper. When you see these new innovative solutions come out, finding new corners of the marketplace and offering that to investors. Investors get to make the decision where they want to put their capital. So this just presents more opportunities and more choice for the end investor. And I think that's another contributing factor in the growth.
Right. Rising interest rates not only increase the total yield package, right? But generally, historically at least, it's very poor for 60-40. It's very bad for equity performance, bond performance. So your relative investment opportunities have declined, right as options and yield exposure tied to derivatives has increased. And I think that's really a big part of the story. You guys are democratizing that, right, through the ETF part, and I think that's important. We're pulling in the street, those that haven't historically been as involved in the options space, whether it's RIAs or retail investors. I think that's so critical, like kind of to just widen out the people that are playing in the space.
It is, and I think when you think of kind of the wrapper, the delivery mechanism for these strategies and that ETF, and we talked about this yesterday, and it's you can see the number of new ETFs that are bringing to the market these underlying option strategies since the ETF rule went into effect a few years back. It's really opened the door for more product development in the space and quicker time to market, lower costs for the issuers themselves. And I think that's really been another kind of contributing focus here. You mentioned the democratization. It's allowing investors to get these kind of pre-packaged option strategies. They don't have to piece it together themselves, and it's wrapped in a 40 Act regulated entity. So nothing's foolproof. There's risk in every investment, but this gives them a delivery vehicle that they know that's proven, in the marketplace, that's well regulated. And it's removing the need for a lot of either managers or investors themselves are going out and having to assemble these strategies directly.
I think that's a critical point. It's not just macro environment, right? That's driving this. It's the actual network effects, I'd call it, of everything. The volume coming in, the regulatory framework changing, access through different brokers, and a more efficient ETF process. So I think that's 100% true. I've always thought of options as almost a superior technology, right? It's a better way to bet on outcomes. 3 dimensions instead of 2. The problem has been forever that you can't access them, or there's not enough liquidity when you want to get done. Those problems are going away. Yeah. And I think that's why we're seeing not just linear growth, but really exponential growth. In the structured product space, in the last 2 years, we've seen a $500 billion increase in structured products. It's almost a doubling, right? But we know most of those structured products are not available to every investor. And I think that's what the ETF business kind of does. It brings that exposure to them. So we've talked about all the great things about ETFs and broadening out the people that are playing in this space. What are the risks, right? Obviously this kind of 700% growth can't go on forever without breaking a few things. That's generally how things work, right? So let's be honest. What can go wrong? Where does the amount of growth do you think in the industry have to kind of slow down for a second to wait for other things happen? Love to hear your thoughts.
Yeah, I think, that parallel just between the ETF market and the options market, I think there's a ton of parallels here and overlapping aspects when you think of what the underlying risks might be. We talk about liquidity risks, right? That exists in an ETF wrapper. If you're buying and selling ETFs, whether it be option-based or long equity or a bond portfolio, that liquidity is something investors need to realize. Is there a risk there? Is this we were talking about the open market, the open corners of the market now in these products that may have lower liquidity. So it might be harder when you need to get out of your position and you need to go into, your trade, understanding what that liquid nature is. The tax aspect here, I think, is we're talking about the end investor. What is the risk there for the tax basis that these high income producing strategies may bring to you as an end investor, and what that taxable exposure might be at the end of the year. So this brings in a significant amount of education, I think, for the investors. The other points, around you think of open interest in the option space, you can kind of marry that to the liquidity dynamic. You can also see that in terms of underlying liquidity and trading volume of the ETF ticker. So again, kind of those parallels there, and those can be signals. You can know what you're getting into and do your homework and do your due diligence. But I think as we've engaged our clients at FTSE Russell, who are developing, a lot of the ETF issuers that are developing these strategies, it becomes incumbent and they understand the ramifications of properly educating investors or making the efforts to educate.
That's so critical, right? It may be an improvement to play in 3 dimensions and be able to play every node, what risk you want to take and how. But it's clearly a bit more complex, right?
Right.
And if we don't educate, if we're not clear with what happens when and what can happen, I think that's how people get in trouble, especially when you democratize and you open it up to people who are not as sophisticated.
Yeah, 100%. You think of some of the new products that we've rolled out in partnership with Cboe is the expansion of the 0-day expiry options on the Russell indexes. And ensuring investors understand what the dynamics are when you're trading these so close to the expiry date. That volatility is going to spike. It's going to trade fundamentally different than something that's got a week or a month, expiration attached to it. So that education point, I think, we're seeing in real time, as these 0-day options become more popular.
Right. And I think the bigger they get, right, they're concentrated generally on certain strikes, right? In certain products, and it can be that concentration, and also the rules-based approach, which often shows everybody which way you're going, right? We saw that, not to liken it to XIV, very different product, but everybody knew which way XIV was going once it started, and it was almost a problem that was foregone at that point. Obviously, different products. We're talking about different things, much less leverage, much less risk, but that still remains, right? You're still focused and concentrated on rules-based, and that can often cause some risk. So I think it's important to educate people about those risks. These are a great diversifier away from, by the way, things that are intrinsically risky that people don't necessarily attribute the risk to, like equities and bonds. You're just taking different risks, right? And I think that's an important point to make. So lastly, what do you see as kind of the biggest things that are coming down the pipe? Obviously been an incredible couple of years. What does the next year or two look like? What are the things you're most excited about?
Yeah, I think we're at an interesting inflection point. We talked about the growth, and obviously this market will kind of start to mature, and maybe that growth slows. And from an ETF perspective, it's common you see a significant amount of closures, after these big swings. So we'll see some products kind of unwind undoubtedly over the next 18 to 24 months. But then we'll see a whole new crop of products coming into market behind it. That's kind of the story of the ETF space. So when we think about what's coming next, I think there's a couple factors here. One is the new investor segments that may be interested in coming into this. So you think of the next wave of growth. ETFs, broadly speaking, have really cracked in and taken over the model space. Models have become very popular, being built around ETFs. So as these products become more popular and more track records are established, you can think of them being inserted as another income stream or income generation tool into the broader models toolkit, which should open even more doors for assets into these products. We think of the retiree space, maybe early innings there as they move and kind of tailor and unwind their exposures here, moving into more of a drawdown. Can we see more and more cash kind of coming in from that demographic? So I think from a distribution perspective, a couple aspects there that should continue to drive kind of AUM increases. But then from a product development perspective, I think here in the U.S. there's only a handful of issuers that have been looking at fixed income exposures and kind of doing option overlay on bonds. So that's probably I don't want to say it's untread, but maybe more of an open marketplace for new innovation. So that's likely something we'll kind of continue to see, especially as we, maybe are moving into a reduced interest rate environment with an election coming up, some uncertainty there. Those are likely products that we might start to see more proliferation of. So that's one to keep an eye on. And then I think as the crypto market continues to evolve and we begin to see more and more option contracts and liquidity in the option space on whether it's Bitcoin or Ethereum or new types of cryptocurrencies, I think those will be significant elements, certainly from a FTSE Russell perspective. That's a space we're watching very closely. I think we'll certainly see some new product ideas coming out of that particular part of the market.
I think there's some structural changes happening, right? Yeah. Those things are playing out from a much bigger macro perspective. Yep. We talked about it, higher interest rates, normalization there. If we continue to see that, right, which is tied to deglobalization and populism and all these other factors, people are going to want different exposure. Yeah. And I think that's a primary driver that may last a decade, really. And I think you pair that with, again, the network effects and how much more efficient these things have become. I think there's a real bullish case for these products going forward.
Absolutely.
All right. Thanks for joining us. Appreciate it, Ryan.
Jim, great speaking with you. Thank you.
Thank you.